Yeah, so good evening. Yeah, good evening, friends. Admin co-host ஆக்குறீங்களா mobile? After a long time meeting, how are you all? இந்த யாருக்காவது இந்த எக்ஸாம் ஃபீவர், ஹெட்ஏக், நோஸ் பிளாக், எக்ஸாம் நோஸ் பிளாக் அந்த மாதிரி எதாவது இருக்கா? ஏன் யாரும் இந்த ஆக்ஷன் தேவையில்லாமல் ஸோ விஷ்ணு எங்கே காணும்? ஸோ அட்லீஸ்ட் நோ ஃபியூ ஆஃப் யூ கேன் இன்னைக்கு பயங்கர மேண்டேட்ரியாக ஐ won't tell all of you to switch on. At least some more can switch on their camera, so that will be good. நோஸ் பிளாக்லாம் இல்லை சார். பார்கவி சேஸ் மைண்ட் பிளாக் தான், மென்டல் பிளாக் கொஞ்சம் ஜாஸ்தி சார் அப்படின்னு. ஓகே, அண்டர்ஸ்டுட். All right, so let's not waste time. So just that so excited to see you all. Even though I thought revision class நம்ம வந்து டைமுக்கு ஆரம்பிச்சலாம் அப்படின்னு ஒரு எண்ணம் இருந்தாலும் we had our own troubles and made us to start at the normal time. Our scheduled time is now started. So we had some technical issues here. So this writing tab was not detected. So we were waiting and Suman sir was doing all forms of technical exploration. In the sense, so many plugs he remove and he will again put and I don't have even dareness to take certain plugs and all. He has just removed all the plugs. அதுக்கப்புறம் எது தேவை இல்லாதது தேவை இருக்குதுன்னு அவர் யோசிக்கவே இல்லை, எல்லாத்தையும் மறுபடியும் போட்டார். எனக்கு பயம். ஐ வில் டூ மேக்ஸிமம் 2 plugs வித் த டேப் ஒன்லி. ஸோ என்னை விட கொஞ்சம் டெக்னிக்கலாக ஒரு அட்வான்ஸ்ட் அப்படின்னு ஐ கேன் சே. எனிவே, okay, so let's now proceed. Let's now start. So we have just planned for 4 sessions. So today one session is for advanced accounting chapters without standards. So only chapters without standards revision. So then by 31st Monday evening we will have group 1 accounting chapters without standards. Then on first Tuesday morning or 7 to 9:30 10 o'clock standards, accounting standards, so that second you will go for the examination. நல்ல ஒரு கான்ஃபிடென்ட்டாக you will go for the examination. அதுக்கப்புறம் before the advanced accounting examination, similarly one morning session we will have for advanced accounting standards, so which is for 30 marks. So today it is not standards because I don't want to tax you with standards today. It's just the revision of various chapters which I was originally scheduling few days back, but அதுக்கப்புறம் Diwali holidays and all happened. So அதுக்கப்புறம் கொஞ்சம் இதுவாக இருந்தது, டைட் ஷெட்யூலிங்காக இருந்தது. ஸோ thereby we couldn't do that. Video is blurrா தெரியலையே. Anyway, so if not if my face is blurred it is okay, but if the writing is there it is okay, no? Writing you can if it is visible. எதுக்கு ரீஸ்டார்ட் பண்ணும்? இதில் ஒரு மெசேஜ் வந்துருக்கு பாருங்களேன். ஃபேஸ் பிளர்னா நோ ப்ராப்ளம். ரீஷெட்யூல் பண்ணவா? ரீஷெட்யூல். ஓகே. ஐயோ, டுமாரோ போடுவா. ஓகே, ஃபைன். அந்த ஸ்க்ரீன் போச்சு. Let's now proceed further. Okay, so advanced accounting. So we can't be choosy about chapters here because you know we have totally 10 chapters. So we have 10 chapters. So we can't like important chapters and all the chapters will have presence in the examination. So what are the 10 chapters we have? we have amalgamation, absorption, external reconstruction. Up to this one chapter, we have internal reconstruction being another chapter. So though we have taken it as a single chapter, but study module wise they are two different chapters. Then another comprehensive chapter is partnership. Then we have another comprehensive chapter is the CFS, consolidation of financial statements, consolidation. So these are bigger major chapters. So then we have, my dear friends, other smaller chapters wise, we have liquidation, bank accounts, liquidation, bank, along with that we also understand about NBFC, buyback and ESOP and ESOP. So this is how we are having the other 5 chapters. Adukapra major chapter is accounting standards. So we find consistently 30 marks coming, and rarely it can go up to 35 marks. So this is the relevance or significance of accounting standard in group 2. Group 1 20 marks only, maximum it goes to 25 marks, but in group 2 it is 30 to 35 marks. Consistent at 30, sometimes 35 marks. Okay. Similarly, out of these 2 chapters, generally it is 20 marks. Sometimes they stop with 15, otherwise it is 20 marks. Partnership and limited liability partnership together, one theory mark generally comes for 5 marks. So together again another 20 marks. Then consolidation generally for 15 marks, my dear friends. This is the relevance of these chapters. So very remote that you have both amalgamation question for 20 marks, then internal reconstruction for 20 marks. So either it is amalgamation, absorption, external reconstruction problem, or it is internal reconstruction problem. So today are we going to discuss like some important questions and all? No important questions, no important chapters, concept and all. This we have already told you many times. Every chapter will have presence in the examination. What we normally do as a student, now I'm just treating myself as a student. I in the morning gone through 3 suggested answers, analyze the various questions came in the each of the examination. Then as a student, if I am going to the exam, what do I expect for the coming exam? Like that, or a small expectation like is what I did, which I am sharing. So this is not something guaranteed chapters that comes, my 7th, 8th, 9th sense and all worked out, or I have extra energy I am just pouring to you, nothing like that sort. This analysis which I was doing right from my maybe 11th, 12th onwards, I was analyzing this. So the same is what I am just sharing with you. Okay. So then here for the last 2 examination, we could see only 5 marks. So for bank accounts, normally it goes to 15 marks. One 5 mark question will be somewhere there, another 10 mark question is there. So 15 marks, not directly 15 mark question, one 10 mark, one 5 mark. NBFC also normally having its presence only for 5 marks. Buyback, consistent coming for 10 marks. ESOP also, last 2 examination coming for 5 marks. Now this is how the paper is generally made. Whether I don't know 125 marks is already there or not. So some chapters suddenly it will increase, decrease. So general pattern only I have just shared here. So when it is 35, 40, 55, 60, 70, 75 and 75, 90, 130 marks. It is like 130 marks. So paper is for 125 marks. So 125 you should be writing 100 marks. You know the paper pattern and all. Okay. Seri. You understand these 3 chapters play very important role. These 3 chapters play very important role, plus accounting standard plays very important role. Okay. Sometimes out of these 5 chapters, 1 chapters may be surprised. Not all the 5 chapters they will shock you by giving 20 marks and all. They may surprise you. Suddenly one buyback question coming for 15 marks or 18, 20 marks. Or suddenly bank P&L balance sheet 20 marks, like that. So far surprise they have not made, so such surprise. So surprise can be expected here. Liquidation, one SOA problem, very remotely tested SOA problem. Suddenly they will give you SOA problem for 15 marks. But when I say all these things, it will not be everything like liquidation 15, bank 15 like this and all. Out of this 5, one of the chapter can spring a surprise. Otherwise normal range of these chapters is this much only. Our core focus should be these 3 chapters. In the last 2 examination, so I found amalgamation problem came. Last 2 examination, so it is May 2022 as well as December 2021. Both the examination, it was amalgamation. Appo being a student, what do I expect? More chance more chance for coming in. நம்ம லக்கி பீப்புளா இருக்க போறோம். என்ன லக்கி பீப்புளா இருக்க போறோம்? லக்கி ஆகிறதுக்கு நிறைய சான்ஸ் உண்டு. அவ்வளவுதான். வாட் இஸ் தட் அப்படின்னா there will be a possibility of what? நான் கமெண்ட் செக்ஷன்ல எதுவுமே போடலையே. So there is a possibility of internal reconstruction. Internal reconstruction ரொம்ப simple. So independent entries to be made. So 10 to 12 adjustments will be given. Independent entries for increase or decrease the values of assets and liability. Preparing a balance sheet with the title unreduced with the revised balances of assets and liability. So high chance appo when you spend time for these single chapter from our classroom viewpoint, focus more on internal reconstruction or at least glance through all the questions from our module. Just glance through and solve all the 3 RTP questions, latest 3 or 4 RTP questions solve from an internal reconstruction viewpoint. When I take the partnership, my dear friends, I have seen that the problem that came in the last 2 examination was, one is the latest examination was Garner versus Murray rules. A partner doing some fraudulent transaction. We had that problem in our module also. So that is one problem. Then before that we had sale to a company problem. So thereby there is a high chance of amalgamation of firm. Another luckiest chapter. Amalgamation of firm means no realization account and all. So you know, anyway we will revise all these chapters. Don't worry, it's not only discussing important discussion chapters etc and all. We are going to actually recall various points which will help you to solve problems fast like that. Next, either it could be amalgamation, sometimes it could be piecemeal distribution. So it could be a piecemeal distribution problem also. Okay, so amalgamation or piecemeal distribution. Otherwise, comprehensive dissolution problem. Without any GVM, there can be a comprehensive dissolution problem. So that asset, this asset sold this much, all this stuff and all. So like that, it could be amalgamation, piecemeal distribution or a normal dissolution problem. In consolidation, one of the consolidation was P&L, then it was balance sheet. Now again I am expecting only balance sheet. Maybe consolidation could be testing your dividend, testing your revaluation. So maybe because these are the 2 adjustments normally causing problems to us in the examination. Both these adjustments did not came in the last 2 examination. So the consolidation in the dividend to revaluation based or issue can we can find that in the examination, my dear friends. Liquidation there is long time they didn't test you B list contributories. So there is a chance. So B list contributories மறக்காம விட்டுறாதீங்க, அதை இக்னோர் பண்ணிடாதீங்க. Just have, because easy understanding, no, B list contributories. Both the sums it was the liquidators remuneration and the payments to various preferential creditors. So there is a chance that even it is 5 mark question, it could be a B list contributories. SOA format also just a glance, so there is a chance. Then in bank normally it is like no provisioning, all these things and all. But last 2 examination I didn't see rebate on bills discounted. So there is a chance that, more chance that. So again it's again I'm telling you, there is nothing called this is like no, this is the rule should be and all. But generally a person setting the paper will see last 2 papers, definitely will see. Appo there will be new questions he want to add. So that is what the trend and the base panni and the analysis we are telling you. Appo rebate on bills discounted without fail, you should be knowing it. NBFC no much problem areas and all. Anyway, last 2 problem they have already tested the computation of tier 1 capital, computation of net owned funds. So that is already tested. Then they also tested this provisioning requirements by percentage and all. Appo it could be a possible problem. The comprehensive problem that we solve on to provisioning for higher purchase or leased asset. Provisioning for higher purchase or leased asset. ஒரு நல்ல காம்ப்ரஹென்சிவ் ப்ராப்ளம் நோ தட் கேன் பி டெஸ்டட். இதெல்லாம் காம்பினேஷனில் வரும்போது சம்டைம்ஸ் இந்த dividend revaluation in consolidation அதெல்லாம் வந்து sometimes we feel like no paper might be tough and all. So buybackல 2 times they have already tested maximum number of shares to be bought back by testing those 3 conditions. So high chance I feel this time will be relaxed. They will ask you only entries relating to buyback. They will give you this many shares has been bought back, but they will ask you entries, because both the examination they were asking the testing 3 different conditions and find out maximum shares to be bought back. Above here it will be based on entries relating to buyback. ESOP, normally what they are asking is that only ESPP entry, one exercise entry alone directly. But this time there is a chance that sometime 10 mark question can be tested from ESOP. Adala study model question irukke, choice limited problem, that is the shares will be vested at the end of first year if the earnings is 10%. The shares will be vested at the end of second year if the average earning is 13%, like that. First year 13, adukapra 12, 10, like that. Suppose first year only we understand vesting period is 2 years. But only when we come to second year, we understand vesting period is 3 years. Like that, one problem is there. And the problem on the entries keta, definitely it is for 10 marks, my dear friends. That is the maximum they can test in ESOP. So don't worry. Appo chuma or glance through of what is expected as a student. So exactly. So RNVG super 2, 3, 3, 3 like that. So this konja expectation we analyze pannitom. Let us now move further into this discussions, my dear friends. Chapter number 1. First year number lucky chapter பண்ணிடலாம். Internal reconstruction வரணும்னு வேண்டிக்கிறேன். So internal reconstruction. So very simple, my dear friends. So what we do in a company which has incurred huge losses, balance sheet of one company is there. So it is having various assets, various liability, share capital. It is also having P&L negative figure, accumulated losses. Appo this company wants to reconstruct means what? This assets which does not overstated values of asset should be brought to the correct values, and accumulated losses shall be eliminated. So in one statement we told unrepresenting asset shall be eliminated. The source will be reduction of capital, and sometimes there will be reduction of liabilities. Like that we discussed. About what is primarily involved in internal reconstruction is that, so independent entries relating to increase or decrease in the values of assets and liability. What is the concept of internal reconstruction? It's a arrangement whereby the capital structure is reorganized to eliminate unrepresenting asset that does not value should be eliminated. Appo we will have increase in asset sometimes. Sir, you just now told decrease in asset. Sometimes land and building can be increased. Otherwise, generally we have seen 99% only decrease in the value of assets. Similarly, decrease in the value of asset. Normally, you find decrease in liability and share capital. Sometimes there will be increase in liabilities. Then some settlement and all may happen. Then few write-off of items like accumulated losses, miscellaneous expenditures like discount on issue shares, debenture, etc. Goodwill should be written off. Exactly. Goodwill cannot be there. Even if they don't tell also, we should write off 3 things we told. Miscellaneous expenditures, accumulated losses, goodwill. So such write-off entries will come. So what are the entries? Asset increases, land and building increases, asset account debit to reconstruction account or capital reduction. Since study module consistently use capital reduction word, we'll use capital reduction. But in the examination, if they ask you to prepare reconstruction account, journal entries and reconstruction account, then throughout the journal entry, we use the word called reconstruction. Otherwise, there is no big, no complex issue to understand that. So, what is that word to be used? Capital reduction. First priority is capital reduction, asset to capital reduction. Then decrease in asset, capital reduction to asset, Sorry. Ab example, sir, land and building. So it is 5 lakhs is there in the balance sheet. It is given as land and building increased by 7 lakhs. Entry is what? Land and building debit to capital reduction 7 lakhs. Suppose they say land and building increased to 7 lakhs. Increased by 7 lakhs na, entry is not 2 lakhs papsa. It is entry itself is 7 lakhs. If the land and building increased to 7 lakhs na, then we should make entry for 2 lakhs. We should make entry for 2 lakhs. This point and all you should be definitely be knowing. Only thing is examination nervousness we will not be giving attention to. So you should really giving attention by year to properly see. Similarly, that will be decrease, missionary, reduced by, reduced to. Reduced by na, the amount given the question should be taken in the journal entry. Reduced to na, then difference between the value should be taken for the journal entries. That's all you should be aware for writing or increasing or decreasing the values of asset. When you take liabilities, my dear friends, if it is like creditors, outstanding expense, loans, director's loan, that person loan, this person loan, director you can make journal entry for the increase or decrease amount. Director you can make entry for increase or decrease amount. But when it is debentures of rupees 100, now they are telling debentures of rupees 100 should be reduced to debentures of rupees 50 each. Abdina, we understand 3 lakhs is now going to become 1,50,000. So 3 lakhs is going to be decreased by 1,50,000. But still, what entry we will do now? We will cancel the old denomination. Debentures of rupees 100, 3 lakhs to debentures of rupees 50, 1,50,000 to capital reduction. Like that, when you have debenture, equity share, preference share with particular denomination means then old denomination should be cancelled and new denomination should be recognized. So that point you should be knowing. The same principle will be applied for share capital, equity share capital. The same principle should be applied for preference share capital, etc. Like that, we will make entry for increase or decrease the values of assets. Settlement means we have discussed one area. What is that? Liability, my dear friends, is already there in balance sheet and not in balance sheet, or a particular liability. If it is there in balance sheet, if it is paid means entry is liability to bank, liability to bank. If it is there in balance sheet and waived means what is the entry? We are just quickly discussing. This is liability to bank. Liability na creditors to bank, loan to bank. Like that, if it is payment na. Suppose there is a sales tax liability, but it's not there in the balance sheet. So, I mean, it is okay. It is not there in the balance sheet, and that amount is paid na. Then entry will be capital reduction to bank, capital reduction to bank. Like that we told, my dear friends. Okay, not goodwill to bank and all. You confusion la irkinga. Internal reconstruction அந்த மாதிரிலாம் கிடையாது. So அது amalgamationல that company's expenses paid by yes, goodwill to bank அப்படின்னு ஏதோ எங்கேயோ கன்ஃபியூஷன்ல இருக்கீங்க அரௌண்ட். ஸோ இங்க எப்படின்னா இன்டர்னல் ரீகன்ஸ்ட்ரக்ஷன்ல பேலன்ஸ் ஷீட் கொஸ்டின்ல ஒரு பேலன்ஸ் ஷீட் இஸ் தேர். இன் தட் a liability is not there, but it is getting paid like sales tax liability, remember, then entry is capital reduction to bank. No sir, in the balance sheet the liability is there and that is getting paid now, that liability to bank. Hope you are understanding. The creditors 5 lakhs, creditors paid 2 lakhs, then creditors to bank the 2 lakhs. Sales tax liability not there within the balance sheet, but you have to pay at the time of reconstruction, then capital reduction to bank. Like that we told. Similarly, a liability which is there in the balance sheet, waived na entry is liability to capital reduction. A liability which is not there in the balance sheet, if it is waived means no entry. Like that we discussed. Very good, super. So this is how we understand about the liability related transactions. Then write-offs, whether given or not given, we should write off reconstruction debit to the miscellaneous expenditure, reconstruction or capital reduction to miscellaneous expenditure, to goodwill, to accumulated losses, that is P&L balance. All these things will be written off, and finally balance in capital reduction will be transferred to capital reserve. In this area, I also told you, my dear friends, when we have say already capital reserve, then that can be used general reserve can be used, securities premium can be used. All these things, when there is deficiency, we will use that. Like that we discussed, my dear friends. Otherwise, automatically don't bring everything into there. If there is a specific direction to use a particular item, securities premium to be used, we'll use it. Otherwise, we will arrive that only if there is a need. Like that we solved in one of the problem, my dear friends. I hope you are remembering. Adukaprom special problems that we solved was like, there was one person called Mr. A. He was having stake in 10% first debenture, 10% second debenture. He was also creditors. There was also interest outstanding. So out of his total debt, a part was waived, part settled by debenture. So what we did, first all these amount transfer to his account, Mr. A's account, debit all these things, credit Mr. A account. Next, he also brought some money, so cash to A's account. Then A account debit to capital reduction to the extent waived, balance settled by debenture, credit debenture. Like that we made entry, my dear friends, all of you. Then similarly some special adjustment, balance sheet la illa, in the note la there is a capital commitment of 30 lakhs. So capital commitment below the balance sheet, we had capital commitment 30 lakhs cancelled by payment of 10%. What is the entry? Capital reduction, because this is not a liability within the balance sheet. So entry will be capital reduction to cash or bank. Like that we will be making the entry, because there is no liability within the balance sheet. It is getting paid now, it's a loss. So you don't make entry for 30 lakhs, you make entry for the actual payment. Henceforth the capital commitment doesn't comes to us. Like that we told, my dear friends. So it is easy. We solved so many problems, my dear friends. We brought, sometimes we are expecting internal reconstruction, feel, so we can get lump mark. Now along with this you should be also be knowing surrender of shares. Internal reconstruction easy, they bring out this concept called surrender of shares, then you should not be like fumbling and all. So you should definitely getting that marks. So surrender of shares concept is very simple, my dear friends. So or balance sheet, so that particular there is 1 lakh equity shares of rupees 100, it is 100 lakhs. So what is surrender of shares? Not reducing the value of this share, we are asking the shareholders to surrender back certain number of shares in favor of the company. So entry will be equity shares. Suppose out of this 1 lakh shares, 30,000 shares surrendered back to the company. Entry will be equity share capital to share surrendered, 30,000 into rupees 100, it is 30 lakhs. Like that we make the entry. Next, if nothing else is mentioned, it is implied that surrendered shares got cancelled. So if it is, this is surrendering, this is a surrendering event, then subsequently when it is cancelled, what is the entry? Entry is very simple, share surrender to capital reduction. But sometimes instead of cancelling these surrendered shares may be reissued. For reissue for what purpose? Either a compensation for a very huge amount of waiver. For a huge amount of waiver, small compensation, or the share surrender can be used for settlement of a particular liability. Share surrender can be used for settlement of a liability. For example, now you are having 30 lakhs. No, in this balance sheet we have creditors or loan. To the extent of, my dear friends, it is given as 120 lakhs. So they are telling that, my dear friends, that 25% of the creditors will be waived. 25% of the creditors amount will be waived. Then they are telling that 25% of the balance will be settled by issue of surrendered shares. 25% of the balance will be settled by issue of surrendered shares. Like that conveyed, we are understanding 25% of creditors, which is 30 lakhs. This is waived. This is waived. Then 25% of balance. So balance how much? Balance வந்து 90 lakhs. So that is 90 lakhs into 25%. 22.5 lakhs settled by surrendered shares. Settled by surrendered shares. So if that be the case, what do you think the entry? Entry will be, so for both waiver and settlement of creditors, entry will be creditors to capital reduction. Sir, settled, sir, but it is settled by issue of surrender shares. No. Now bringing the concept, recalling the concept. Some of you would have forgotten, some of you, many of you remembering what is the concept that we discussed here, that a liability reduces either by waiver or by settlement by issue of surrendered shares. The liability will be transferred to capital reduction account. Liability will be transferred to capital reduction account. If there is a reduction in liability, either by waiver or by settlement. What settlement? Cash settlement? No. New share settlement? No. By issue of surrendered shares. By issue of surrendered shares. So in that case, entry will be creditors to capital reduction. In this case, 52.5 lakhs. 52.5 and share surrender to equity share capital reissue entry will be 22.5 lakhs. 22.5 lakhs. This is what we should be understanding. Hope you are following this, everybody. So suppose in this problem they are telling that creditors of 120, 25% waived, balance 25% settled in cash. Then what is the entry? If that be the case, entry is creditors to capital reduction 30 lakhs, then creditors to cash or bank 22.5. Creditors to cash or bank 20. Usually we made a compound entry, consolidated entry. Creditors 52.5 to capital reduction 30 lakhs to bank 22.5. Like that we made entry, my dear friends. All of you. Suppose this sum. Creditors waived by 25%. Balance creditors 25% should be settled by issue of shares of the company, new shares of the company. Then the entry is creditors 52.5 to capital reduction 30 to equity share capital 22.5. Like that you make entry. Hope you are following this. Why here alone? Even though 22.5 is settled, you are transferring 22.5 to capital reduction because that reduction happened because of surrender of shares. So thereby any reduction because of surrender of shares, either settlement or waiver, by using surrender shares, liability reduces. How reduces? Waiver or settlement. Both will go to capital reduction account. And issue of surrender shares, only one entry. So relating to surrender shares, three entry. What are the three entries? First is surrendered, share capital to share surrendered. Cancelled, share surrendered to capital reduction. Reissued, share surrendered to equity share capital. Like that, three entries. If the problem involving share surrender come also, you should be in a position to solve, my dear friends. These are the maximum we discussed in the internal reconstruction. If you have any doubts from solving several problems, you can raise immediately, or at that time, before one day, before the advanced accounting class, we are going to have a session. So, not a lengthy session we can have at that time also, you can ask. So, this is recalling internal reconstruction, my dear friends. Going to amalgamation absorption. Sir, we can't guarantee, the problem, this chapter, this areas or questions won't come and all. So you should know there are three stages, or there are four stages of problem solving. Purchase consideration. Purchase consideration. Either you should know A Limited, B Limited combines into form a company called C Limited, or A Limited absorb B Limited. A Limited absorbs B Limited. So you will be having after this event A Limited. So like that, this is called absorption, this is called amalgamation, blah blah blah. So purchase consideration, my dear friends. So we have ledger accounts to close the books of selling company. Ledger accounts in the books of selling company. entries in the books of purchasing company, preparation of balance sheet, purchase consideration. My dear friends, quick recalling, if you want to solve 2-3 questions on the RTP, what is it we should understand now? We need to check, is it net asset or net payments? Lump sum method generally won't be applicable, net asset or net payments. By reading the question, if equity shareholders and preference shareholders amount independently given na, then it is net payments method. Otherwise, it is net asset method. Like that we told. So, you should not check whether separate value given for assets or liability. That may be given, may not be given, doesn't matter. I want to know whether when you have balance sheet, you have two types of owners or single owner, doesn't matter. For the owners, whether the question mentioned independent payment. If it is mentioned, it is net payments method. So, I also told you, if the value per share of the selling company is fixed, adu equity share. If the value per equity share of selling company fixed, then we automatically understand it is net payments method. So, even though the question says that, so purchasing company fix 15 rupees as price of equity share of selling company. Then they are telling purchasing company will issue 20,000 shares of rupees 10 at so and so and balance in cash. What is the balance in cash na? Immediately you should understand that as net asset and all, it is net payments only, because the moment you fix the value as 15 na, whatever shares you have, that into 15 da purchase consideration. Like that we solved, my dear friends. Hope you remember. Appo you should spend maximum time or 10 minutes aanalum paravailla, relaxed you think and compute purchase consideration properly. The moment you know it is not net payments method, then net asset method, in which you should take assets taken over at agreed value. Agreed value is very important. Liabilities taken over at agreed value, you will be getting the purchase consideration. That's all. Idoda sethu, you might have sometimes intrinsic value absorption. Intrinsic value absorption. In that case, what na? Purchase consideration is net asset method na. So you have two companies, A Limited, B Limited. This is purchasing company, selling company. What we should do na? Step number 1, compute net asset of both the companies. We will calculate net asset. Assets minus liabilities of purchasing company, asset minus liabilities of selling company. Then what we should find out is number of shares. You will get number of shares. Then net asset value per share of purchasing company only we want. We don't require both the companies. Maybe formality you could see they are writing both the companies and all. We want net asset value per share of purchasing company. Then find out number of shares to be issued. How to find out number of shares to be issued? We want to give this much consideration to ba. This consideration we are going to give by using our share, which is valued at net asset of our company. That is the concept of intrinsic value absorption. Net asset of your company I will give consideration, but that consideration I will give by using my share. What is the value of my share? My value of my share is net asset value per share. Net asset divided by number of share. So we will find a number of shares to be issued is net asset of selling company divided by value per equity share of purchasing company. You get number of shares to be issued. This number of shares to be issued into the net asset value per equity share of purchasing company is the purchase consideration, which should be equal to net asset of selling company. This is the normal thing. But sometimes they will tell you that though intrinsic value absorption we want, but PC to be recorded at par. In 2 questions they mentioned like this, PC to be recorded at par. Oh, in that case, then number of shares, after computing number of shares, will multiply only with the face value of the share. Will give you a different amount of consideration. So we explained that concept. Hope you remember. Okay. Once PC is calculated, thereafter closing the books of selling company, realization account, preference shareholders account, equity shareholders account. These are the 3 basic accounts. Then purchasing company account. Various forms of consideration. You have cash, equity shares in purchasing company, preference shares in purchasing company. Like that you have opened these accounts. 5 steps. What are the 5 steps? Dismantling the balance sheet means what? So transfer all the assets to realization account, debit side. Transfer all liabilities to realization credit side. Equity share capital, reserves and surplus to equity shareholders. Preference share capital you take here. From balance sheet, all items transferred to these 3 accounts. Next we have simple 4 steps. So mechanical entries, PC due. So PC due, what is the entry? By purchasing company. Our purchasing company you will write to realization. That amount what you already calculated. These are all not involving any calculations because every calculation already made. So thereby PC due. Next PC received. You will write by cash, by equity share. So you receive the consideration and that amount will be recognized in a separate account. First you should distribute to preference shareholders as given in the question. Whatever amount agreed should be given. If agreed amount not given, then their contributed capital will be given. Then whatever balance left will be given to preference shareholders. When we say whatever balance left, it may be the cash given by the selling company, purchasing company, or it may be some cash left not taken over, or it may be some cash we got it by selling some asset which is not taken over. So everything should be given to equity shareholders. And finally transfer realization profit or loss. Prior to that, preference shareholders, when you balance, any gain or loss should be taken to realization account. So that is what we discussed, my dear friends. Hope you remember. Okay. So simple 5 steps: dismantling balance sheet, PC due, PC receive, remember action, PC distributed, transfer, realization profit or loss. Automatica equity shareholders account will tally. That magic will be there. So then entries in the books of purchasing company, my dear friends, business purchase debit to liquidator of selling company to the extent of purchase consideration. Again, first step over na, balance and all same amount based entries. Next, assets taken over at agreed value, liabilities taken over at agreed value. To business purchase, you will have difference which will be recognized as goodwill or capital reserve. Goodwill or capital reserve. Then third entry is payment to liquidator. At that time only you should split share capital and securities premium. 10 rupees share issued for 15 na, 10 rupees share capital, 5 rupees securities premium split should be made. Then few other entries what and all na, liquidation expense of that company paid by years. Then entry is goodwill or capital reserve to cash or bank. Idella last exam tested. So goodwill or capital reserve to cash or bank. Then mutual owings elimination. So this adjustment alone, don't get confusion at the time of calculation of PC, at the time of closing the books of selling company, incorporation of assets and liability at the time alone, don't consider. After incorporation, in our books already we have receivable. Through incorporation we have now payable. Now receivable by me, payable by me will be eliminated. So after making all the entries, we will now eliminate mutual owings. So liability to asset, bills payable to bills receivable, creditors to debtors, loans payable to loans receivable. Like that we make the entry, my dear friends. Okay. So then my dear friends, sometimes you will have unrealized profit. Unrealized profit. Adukku entry will be goodwill or capital reserve to stock. Goodwill or capital reserve to stock. So which means before the amalgamation absorption, they have transferred some stock, some margin is there na. To the extent of the goods still lying unsold, you should be eliminating the margin. These are the entries. Balance sheet will be prepared with the revised values of assets and liabilities. Very, very simple. Only thing is carefully you should jot down. So internal reconciliation we expect, but doesn't mean that absorption comes now. Oh, it is against my expectation, I will not do. Like that you can't give up, my dear friends. We have already told you, never you should not give up. Latest and the never ever give up attitude, you could have got it from Virat Kohli also. 40 for 4 and still we won the match. Okay, so that is different. So அந்த ஒரு ட்ரெண்ட்ல தான் நம்ம இருக்கணும். நம்ம எனர்ஜி ஃபுல்லா அதே மாதிரி தான் இருக்கணும். Okay, expect something. Okay, like this will happen. ரோஹித்தே அடிச்சிருவாரு, ராகுல் அடிச்சா பரவாயில்ல, 5 விக்கெட்ஸ் போனாலுமே வில் வின் அப்படின்னு நம்ம நினச்சிக்கணும். அந்த மாதிரி தான் we should be there. Okay, fine. So expectation of 1 or 2 question doesn't come also, it's okay. We are ready with all the chapters. So first chapter, amalgamation, absorption, over. This is also over. If the question specifically asks you amalgamation, the nature of merger, then what we should do? Very simple pa. A limited is there, B limited is there. A limited absorb B limited. So we should take all these assets and liabilities at book values. Then purchase consideration should be compared with one number. What is that? Face value of share capital of selling company. Like this you compare and you find that consideration less, then super, no problem. You will be taking assets, liabilities, various reserves and surplus as it is. In addition to that, you will have capital reserve if the consideration is less. But if the consideration is more, then you are having loss. So that loss will be adjusted against the reserves and surplus. Will be adjusted against the reserves and surplus. Balance only you can take. This much only you should remember. Sometimes along with this, they may ask you a theory question suggesting what are the conditions to be satisfied for amalgamation to be treated in the nature of merger. Because here and there, though I said accounts is not having theory, but 5-10 marks LLP based on theory question is coming. Similarly, last time we had a write short notes on Garner versus Murray rules, which means it is not based on some vague areas of the modules. It is purely based on the what you have learned through a concept. So what concept you learned only asking as theories. Apo the conditions to be satisfied or pooling of interest method, short notes. So you should write pooling of interest method should be applied when there is amalgamation in the nature of merger. Our pooling of interest method, you can't write these 5 conditions. What is pooling of interest method of accounting? Recognizing assets and liabilities at book values. No adjustment should be made. All assets and liabilities should be recognized. Difference between the consideration and share capital adjustment. Like that, the accounting treatment should be given. That is called pooling of interest method. All of you. So you should know what question they are asking. What are the conditions to be satisfied for applying pooling of interest method? Then you will write those 5 conditions. Shareholders holding not less than 90% of the face value of equity share capital transfer or company shall be blah blah blah. You should be writing, my dear friends. So கடைசியில் சொன்னது புரியல, பரவாயில்ல விட்டுருங்க. So that way we have those 5 conditions. We spend 1.5 hours to learn that oral test or threatened oral test, though we didn't had that properly. So அந்த மாதிரி we have learned. So such question can come. This is what amalgamation, absorption, reconstruction, internal reconstruction. Okay, now quickly moving on to the next chapter, which is partnership accounts. My dear friends, in the partnership accounts chapter, so கொஞ்சம் பயங்கர ஃபாஸ்ட்டாக ரீகாலிங் தான் பண்ணுறோம். You should not expect this 2.5 hours in which I will solve 4 important questions. In that 2 questions will come in the exam. அந்த மாதிரியான கிளாஸ் இது இல்லை. Okay, if I don't know whether what is your expectation, I don't know. I thought sir will solve exactly 4 questions. Other 2 questions as it is will come. நான் அப்படியே 16 + 16 32 வாங்கி இன்னும் கொஞ்சம் மார்க் வாங்கி பாஸ் பண்ணுறேன்ற எக்ஸ்பெக்டேஷன் வந்து உட்காந்துடாதீங்க. Okay, so we just recalling all the concepts. What we did for 400 hours, we are just trying to do in 2.5 hours time. That's all. Okay, so partnership accounts, we have problems like this, my dear friends. Dissolution, adala simple. Garner versus Murray. Insolvency of firm, insolvency of partnership firm, sale to a company, sale to a firm, amalgamation of firm, piecemeal distribution. Hope you remember these are the various problem areas we listed and we discussed for 36 hours. Partnership accounts chapter. So my dear friends, in partnership, same amalgamation accounting will be followed. In fact, first we took actually partnership. So where you have a balance sheet of a partnership firm A and B capital, you have various assets and liabilities. So normally a simple dissolution, what we do, very simple, my dear friends. We open a realization account and partners capital account. And we also generally open the cash account for recording the inflow outflow. First, what we will do, all the assets we transfer to realization account, all the assets. All liabilities will transfer to realization account, assets, liability. Cash in the cash account. Partners capital in the capital account. Also reserves and surplus in the capital account. Like this, first given balance sheet information should be transferred to these three accounts. Realization account, cash account, partners capital account. I told you separate account opening, not opening, that is not much, that is not a serious thing and all. Whether you open separate account or you route it through realization, it doesn't cause much difference. It is not significant also. Anyway, gain or loss from every asset should be routed finally through realization. Suppose no, some asset not taken over, somebody open separate account, somebody transfer to realization. Now both of them will have same realization profit or loss. Both of them will have same realization profit or loss, it doesn't matter. So first this is done. Then what we will do, adjustments they would have mentioned various asset sold for this much, various liability paid this much. So prepare working note, my dear friends. In the working note you will have assets realized, machinery, stock, debtors, you total. Liabilities paid, creditors, bills payable, outstanding expenses, total. Then simple entry for asset realization, it is cash to realization. So by cash against this asset at book value, this much is received. That will be taken in the cash account. Liabilities paid, realization to cash, including expenses. Then there will be takeover by partners. Asset taken over, partners capital to realization. Liabilities taken over, realization to partners capital. Like that, simple three entries. Once that is over, then my dear friends, you can balance the realization account. You will be getting profit or loss. Transfer to partners capital. Then in the partners capital, make the settlement. The amount of cash will be taken into cash account. Cash account will automatically tally. Like that, we conveyed 5 steps. Dismantling balance sheet. Thereafter, disposal of assets and liabilities. Takeover by partners. Transfer of realization profit or loss. S for settlement. So overall, we told this as DDTTS effect. So S for settlement, S for smile. Like that, we completed a simple dissolution problems, my dear friends. In this problem, when you have Garner versus Murray rule, what is that? Out of several partners, at least one partner insolvent. Similarly, at least 2 partners solvent. Then there is no agreement to share capital losses. Insolvency loss means capital loss. A partner who should bring some money, but he could not bring. Insolvent partner, other partners okay, they will bring, they have to bring. They can't tell I won't bring. Insolvent partner could not bring the money, but that losses alone has to be borne in the dash ratio, capital ratio. But along with that, we also apply one more rule called their share of realization loss shall be brought in cash by all the solvent partners. But 2 rules we applied. So how do you apply these 2 rules? First, dismantling of balance sheet completed. We make entry for asset realized, liabilities paid. We made entry for takeover by partners. We made entry for realization profit or loss. And imagine it is loss, you have transferred loss amount. What loss you transferred, that amount should be credited as by cash. Generally, it is only a book entry. It's okay. We make that entry. You need not check whether there is adequate cash or not and all. So you will make the rule number 1 by cash. Then finally you balance insolvent partner account, get the deficiency that will be borne by. The deficiency means it will appear as the credit because debit is more. That is why you are getting in the credit side, which will be debited to solvent partners in their capital ratio. Capital ratio, okay? Fluctuating capital na, then it is capital as adjusted by reserves and surplus existing on the date of dissolution. Fixed capital, no problem. It's just the balance in capital. Like that we discussed. And finally, you balance the solvent partners account. then the settlement amount you take into cash account will automatically tally. This is the point we discussed for Garner versus Murray rules. Before that, one more point also we want to discuss. In the dissolution, it states one of the adjustment that creditors took over furniture valued at 6,000. Creditors took over furniture valued at 6,000. So what is that we should do? What is the journal we should do in partnership abdina or in this dissolution problem na? No entry. So when you want to make posting or journal entry, either we should have received cash or paid cash, or partners took over asset, partners took over liability. Now when a liability takes over an asset, bankers taking machinery, creditors ki debtors assigned, or some other liability taking some other asset. So for this, no journal entry to be made. Automatically profit or loss will be accounted, because in the realization account, in one place book value of asset is there, book value of liability is there. Now if you assigned na, automatically differences accounted as gain or loss. We need not do anything. That point also you should remember, all of you. Suppose the question also tell insolvency of partnership firm. Insolvency of partnership firm. In that case, what we should do? In that case, what we should do now? Apart from opening realization cash and partners capital, we should open various liabilities accounts separately. Efficiency, yes. Apart from that, we should open various liabilities also. Then you transfer various assets to realization, liability separate account, cash in the cash account, partners capital in the capital account, that way transferred. You realize cash from sale of assets, aggregate sale is single journal entry, cash to realization. You also try to recover money from partners if possible, because firm is already insolvent. So naturally, when we say firm is insolvent, all the partners are implied to be insolvent, but they can bring some cash. Whatever cash possible, you take that cash also. Then with that cash, make payment in a particular order. First, expenses. Next, secured creditors, outsiders. Next, unsecured creditors. Then only partners loan. Then only partners capital. Like that we told, my dear friends. So that way we make these payments. Upon some liability which is having balances in the credit side. All liability have balances. Some, this is fully paid. This is partly paid. This liability nothing paid. This is partly paid. But whatever liability is not paid, similarly whatever capital not settled will be transferred to an account called deficiency account, which will tally. This deficiency account, liability is transferred, capital transferred, naturally deficiency account will tally. This was the third segment. All of you, partnership 36 to 40 hours la, about 20 hours completed. So we are just moving on to remaining 20 hours. Okay. Sir, ido jet pogudu, the jetto, aeroplane, helicopter. Okay, so we are just recalling certain points. If you get any doubts for the last 15-20 days you are studying, if you are getting any doubt, you can just quickly raise, my dear friends, so that the points are engavadhu oru edathila maati ukkandukum. So the examination in 1 week, 10 days na for group 2. Group 1 ku few days da, group 1 2 ku you have few more days. Anyway, doesn't matter. Coming back to this, my dear friends, sale to a company. In that case, same procedure we follow. Realization account, cash account, partners capital account we follow. Only thing is, we'll be having an account called purchasing company account, from whom we would have shown purchase consideration receivable. We would have accounted purchase consideration receivable, and we receive normally in shares. So when we receive shares of purchasing company, and you have shares of purchasing company account, first generally we will distribute shares in some agreed ratio. The question would have given some agreed ratio. Agreed ratio not given, we will apportion this in the capital ratio. That point only you should be knowing, my dear friends. Hope you are understanding, all of you. So I am not touching more about sale to a company here. just let me quickly take up, since last two examination we did not had amalgamation of firms. So let me touch upon this area, amalgamation of firm. So you have AB and Co, in which A and B partners, CD and Co, in which C and D partners. So what happens is that they are forming a new partnership firm A, B, C, D and Co, in which all the partners are going to be partners. In that case, what we will do now, we will not close the books, we will not prepare realization account, etc. and all. We close AB and Co's books. How you know? By transferring everything to ABCD and Co. Everything will be transferred to ABCD and Co. Our ABCD and books la enna entry na, assets to liabilities to A's capital to B's capital, assets to liabilities to C's capital to D's capital. Like this, separate entry you can make, or you can make a combined entry also. Total assets, total liabilities to A's capital, B's capital, C's capital, D's capital. But before you, before ABCD recognize all the assets and liabilities, what in their individual firm they will do na? In their individual firm, undistributed profits they will credit in their capital account. Undistributed profits, if any. They will do revaluation of assets, and the profit or loss also will be taken to partners capital account. Goodwill will be raised. Goodwill will be raised, and that also will be taken into partners capital account. So in our books we have revised balances of capital. For finding revised capital, you should do working note. Separate capital account should have presented adjusting undistributed profits, revaluation and goodwill. Then in the new company, suppose between these two firms, if they had any mutual owings, such mutual owings shall be eliminated. Similarly, if they have raised goodwill, then that goodwill should be written off. Goodwill should be written off. Then one more thing that may happen is that proportionate capital adjustment. Proportionate capital adjustment, either by taking total capital approach or by taking individual capital approach. Hope you remember this. Total capital approach na, after making all adjustments, A, B, C, D is having capital like this: 5 lakhs, 4 lakhs, 3.6 lakhs, 1.4 lakhs, 9 plus 5, 14 lakhs capital. Now, if their profit sharing ratio is 4:3:2:1 abdina, then total capital approach is very simple. 14 lakhs should be arranged in this ratio. So thereby this should be 5.6 lakhs. This has to be 4.2. This is called desired capital. This should be the capital. This total should be apportioned in this ratio. So this is 2.8. This is 1.4. Same 14 lakhs now. Appo, this is actuals existing. This is what we require na. A should bring 60,000. B actuals 4 lakh, but should be 4.2 na. He should bring 20,000. C actual 3.6, but should be only 2.8 na. We give 80,000 to him. Like that we make entry for receiving capital, payment of capital. Also one more point is that inflow will be equal to outflow. This is called total capital approach. Another approach is individual capital approach. Individual capital approach na, question should tell very clearly which partner's capital as base. So if the question says C's capital as base na, then very simple. It is for C 3.6 lakhs capital for 2 shares. Now what we can do is that for 1 share it is 1.8 lakhs. 1 share 1.8 lakhs. Now what is for 4 share? What is for 3 share? What is for 1 share? Like that we should find out other partners capital and find out how much they should bring in or how much they should be paid. Like that we make the adjustment, my dear friends. Hope you are following this. This is 1 hour da. 1 hour da 2-3 minutes we are conveying. Hope you are understanding this. Okay. Teaching illa, revising, recalling, fast track. So test match 50 test match நம்ம ஆடினது அது 50 overs ஆடல 20 overs ஆடல ரெயின் கர்டன் 5 overs ஆடுறோம். அதனால வேற எதுவுமே பண்ண முடியல, சான்ஸே கிடையாது. அந்த ஃபாஸ்ட்ல தான் ப்ரொசீட் பண்றோம். இன் பிட்வீன் எனி டவுட்ஸ்னா யூ கேன் ரைஸ் மை டியர் ஃப்ரெண்ட்ஸ். ஓகே, ஸோ these are the things you should remember in case of amalgamation of firm. Realization account open pandadinga. Please don't open realization account in case of amalgamation of firm question. Now, 30 hours you would have solved the chapter by preparing realization account. Maybe 2 hours then we have spent on the amalgamation of firm. Another example, first student will do open realization account. That's pannadinga amalgamation of firm. Okay. Piecemeal distribution. My dear friends, what we should do piecemeal distribution la making settlement to partners. Settlement to partners in a particular order. We have relative capital method, maximum loss method. Relative capital method, maximum loss method. So under relative capital method, what we will do now? So we will take partners capital outstanding. Partners capital outstanding. Say 4 lakhs, 3,20,000 and 2 lakhs. So imagine, my dear friends, profit sharing ratio is 3:1. So what we will do, we will identify capital base for one share, 4 lakhs by 3, 1,33,333. This is 1,60,000, this is 2 lakhs. So we'll identify each of the partners per share contribution. Adala A less, A only contributed less. Taking this as base, we'll find out other partners relative capital. So 133 into 3, 4 lakhs. 133 into 2, 2,66,667. 1,33,333. So we get excess capital. How now? 4 minus 4, 0 here. A is only less, so A doesn't have excess. B, 320 minus this amount, so which is 53,333. 66,667. So like that we are getting. Now once again what we will do, we take the ratio between them 2:1, apply the same procedure and find out excess of excess. Find out excess of excess. Then we identify stage 1 payment, stage 2 payment, stage 3 payment. So in stage number 1, only 2 B, O, C, your own. I am not making the computation and all. So then you will make payment to both B and C in their profit sharing ratio. Then to A, B, C. That order should be determined. Once you determine this order, you should start making payment. But when you start paying, first ensure all the liabilities are paid. All the liabilities are paid. So creditors, various expenses paid. Similarly, amount is also set aside for expenses. And balance will be there, and the balance you should pay in this particular order. But suddenly some of the partners will do some naughty things. What is the naughty things, sir? Naughty things by taking over assets and liability. In between they take over, now you should calculate something called compensation. Either you can go for the long route. What is the long route? Again computing order. Again computing order. Or short route. What is the short route? Now for this much share, he has taken this much. Then for the other partner share, how much should be compensated? Like that we calculate something called compensation. We solve the problem. Remember these things. I'm just recalling these things. So similarly, there will be commission on assets realized in assets realized into R by 100. Commission in assets realized into R by 100. And a commission on payments to partners na, then amount available into R by 100 plus R. This much cash available na, full cash you won't pay, no. So cash available into R by 100 plus R. Commission based question can also come. Similarly, in the latest RTP question, not our latest RTP, old question only. We also solved in the classroom only. So partners having capital balance AB, there is loan amount, my dear friends, partner AB na, then this amount should be set off. The netted balance only should be used for finding excess capital, excess of excess and all. But either way, suppose your loan A, loan B here na, then that is separately paid as an external liability that should not be added for finding the excess capital. But if it is capital in the liability side, loan in the asset side, netted off, then only you will find out excess capital, the latest RTP problem. Our module also having the same problem. We already done the problems also. So in the commission should be carefully taken. Similarly, you set aside some amount for liquidation expenses. Later on you will be getting some surplus. அதுக்கப்புறம் compensation to partners because of takeover by partner. These are the things that you should remember, the relative capital method. Hope you remember. Okay, one problem solved. Definitely you can attempt the question. Attempt final answer pakka doesn't matter, my dear friend. Don't give much stress and all. If you can complete and go to the end part of the solution, that itself is enough. So you should be feeling really happy for completing the solution. Don't worry about final answer. Suddenly after the classroom, after the examination, no, he got 1000, I got 1100 அப்படிலாம் வரியே பண்ணாதீங்க. Completed full solution solved get the happiness. Definitely you're going to get marks. Lot of marks you will get. Maybe if you lose also 1 or 2 marks. So don't discuss the answer also, my dear friends, after examination hall. Okay, never do that. வேணுன்ட்டே பண்ணுவா சில பசங்க. ஓகே, எனக்கு என்னடா வந்து இல்லை உனக்கு என்ன வேணுன்ட்டே வந்து சொல்லுவான், அதெல்லாம் வேண்டாம். ஸோ anyway, coming back to this, my dear friends, ஒரு நிமிஷம் இன்னும் கொஞ்சம் வாட்டர். In between you can switch off and go have coffee, stretching exercise, etc. and all. So I will just keep continuing, my dear friends. Okay, so proceeding to the next is a maximum loss method. And the maximum loss method, having discussed this piecemeal distribution, maximum loss method, what we will do, partners are there, A, B, C. Suppose we have 4 lakhs, 3,20,000 and 2 lakhs. So it is 9,20,000 total. 9,20,000 total. Suppose you have cash of 20,000. Now you have cash 20,000. Then what this method says now, okay, if I have cash, I will pay to somebody. Balance, no cash will be available. Even though I have more assets to come, today no more cash. But first I will compute, as on today, maximum loss is 9 lakhs. Let me see who is having the ability to bear the loss. Who is having the ability to bear the loss? Like that, 9 lakhs loss will be distributed. 9 lakhs loss in the ratio 3:2:1. So it is 1,50,000. So here it is 4,50,000 loss distributed. And here it is 3 lakhs loss distributed. And here it is 1,50,000 loss distributed. So like this we distribute first loss. Loss distribute panna odane A oda capital become -50,000. And this becomes positive 20,000. And this becomes 50,000. So two partners showing positive, one partner showing negative. This will be treated as insolvency loss. He's not insolvent. Is he insolvent? No. Chuma assumption. Insolvency loss madri treat pannom. So this will be given to other partners in the capital ratio 32:20, 8:5, 8:5. So 50,000 in the ratio 8:5. அது எவ்வளோன்னு தெரியலையே. So it should be in the ratio 8:5. So 4 lakhs by 13. So 30,770 and 19,230. 19,230. So like that you should be distributing. So this has become nil and this becomes 10,770 and this becomes 30,770. 30,770. Now what we should do now? Insolvency loss of this person should be given to the other partner. Automatically this will become 20,000. So when you repeat the steps, partner's capital shows either nil balance or positive balance. The moment you arrive positive balance now, it will exactly match with the cash available. So cash will be paid to that person. Very, very easy maximum loss method. Very, very easy because it is never going to be affected by the takeover by partners. This method, so when suddenly in between somebody takes over now, that partner's capital you reduce, that's all. Nothing more than that you should be doing. So thereby maximum loss method is going to be unaffected by the takeover. So you should not feel, yo, maximum loss method எனக்கு கிளாஸ்லயே புரியல அப்படின்னு உட்காராதீங்க. மேபி இப்போ புரிஞ்சிருக்கலாம் ஏதோ ஒன்று. So that way we are understanding this, my dear friends, about maximum loss method. So இதான் வந்து partnership 36 hours or 40 hours ஓட குவிக் சம்மரி. ஏதாவது பார்ட்னர்ஷிப்பில் ஏதாவது டவுட்ஸ் இருந்தால் கேட்டிருக்கேன். ஸோ இப்போ நம்ம வந்து 72 hours to 80 hours of our class time completed. Amalgamation, internal reconstruction, partnership, ரெண்டு பெரிய கடல் ஓஷன் 2 months கிட்ட நம்ம நடத்தினது இப்போ ஒரு 2 hours கூட ஆகலை. 1.5 hours, 1 hour 20 minutes completed. this much only we have. அதை தான் நம்ம வந்து சும்மா 80% ஜம்மு மாதிரி இழுத்துட்டு இருந்தோம். ஓகே, ஸோ hope you are just following it. Let's now go to the next segment, my dear friends. Consolidated balance sheet நடத்தி உங்களை இது பண்ணுமான்னு தெரில. Exactly, very good Ramachandra. அப்போ பண்ணலாம். Consolidated balance sheet, 5th standard chapter. Bhargavi, remember this? And Ramachandra says 4C approach. அது கொஞ்சம் இதுவாக இருக்கு. இந்த 5th standard chapter sarcastic அப்படின்னு clear-ஆ தெரியுது. So my dear friends, so you are given with 2 tallied balance sheet. What we should do, we should make line by line addition of assets, liabilities after making certain adjustments. So PPE with PPE, everything, stock with stock, debtors with debtors, cash with cash, you should be keep on making additions. So what we will do, in the process of this addition, 2 things gets eliminated. One is investment held and the share capital and reserves and surplus of subsidiary gets eliminated. These 2 things gets eliminated. இதுக்கு பதிலா இந்த CBS ல all other things remaining the same. In the CBS la we have few new items. What are the new items na? One is, this is the net assets we are taking by paying only say 70% of consideration. When we hold 70% investment means we paid only 70% consideration, but we took all the assets and liability. Appo 30% net asset consideration we have not paid. We are going to simply show it as payable under the head minority interest. But what is primarily minority interest na? Assets minus liabilities of subsidiary into outsiders percentage. This assets liability computation only we are doing by adding share capital plus reserves and surplus. Share capital plus reserves and surplus. Only thing is, for a particular requirement, this reserves and surplus of subsidiary is getting classified into pre-acquisition, post-acquisition. Pre-acquisition, post-acquisition. For what purpose we compute this na? To know what is this company's net asset on acquisition. Adukku we take share capital plus pre-acquisition profit. Share capital plus pre-acquisition profit. That is actually not for minority interest calculation. It is for computing goodwill or capital reserve. It is for computing goodwill or capital reserve. Exactly, super. Appo what we will do is that apart from computing minority interest, we have some computation of goodwill or capital reserve in which we compare cost of investment and our share of net assets. Our share of net assets comprising from equity capital and pre-acquisition profits. Pre-acquisition profit. For that we should have classified the reserves surplus into pre and post. So thereby the first exercise is classifying reserves and surplus into pre and post. So consolidation. Ipo idu chuma or basic concept da. Go into consolidation. What we did is in our classroom 4C approach. 4C approach. Read the problem. Given balance sheet considered, then adjustments considered. Now pick certain information. We call this as cut-off data. What is this cut-off data? Data of acquisition, data of consolidation. Then percentage of holding interest, percentage of minority interest. This percentage is based on number of shares you hold today and not number of shares you acquired. So question might tell you purchased 40,000 shares, but they are having 1 lakh shares. Oh, 40%. So no relationship, no consolidation. Note edila, no consolidation, 20 marks. So someday they would have given bonus, my dear friends, and the bonus you should have taken. So maybe 1 for 2 bonus na 20,000. So 40 plus 20, 60,000 divided by 1 lakh, 60%. So it is based on the shares you hold and not shares you acquired. Very, very important point you should remember. So say 60%, adukapra 40%. This you identified. Next what we should do na? Second is take subsidiaries balance sheet. Go to the question paper. Take subsidiaries balance sheet. Now I'm not explaining concept, I'm just explaining the steps, sequence of steps. Subsidiary balance sheet, you take reserves and surplus. You have general reserve, you have P&L, like this you have amounts. What do you do now? Classify this into pre and post, for which information will be given in the question. So general reserve related எதுமே கொடுக்கல சார், nothing is given sir. General reserve full post free, general reserve full free. General reserve related no information given sir. Oh, full general reserve is free, like that you take my dear friends. Okay, so if information given then according to the date classify into pre-acquisition, post-acquisition. Hope you remember the classification my dear friends, all of you, which means suppose the date is 1st August abdina, the amount existing on that date is pre, anything after that is post. That's the basic concept. So same way you should classify the reserve surplus into P&L into pre and post. So pre and post, suppose acquisition on 1st 8th abdina, they will give balance on 1/4 and 1/4/21, and this is increased during 21/22, or 1/4/22, this is increase in 22/23 for your examination. So then what you should do now, this should be further classified into 4 months and 8 months. So opening balance plus 4 months is pre, opening balance plus 4 months is pre, and balance 8 months is post. So for this you are assuming the profits has been even, profit has been even. Suppose the profit is not even, then such abnormality should be eliminated, then classified. Consider the abnormality at the appropriate place. One point to be remembered. Another point is, question says 31st March 2023 8 lakhs, opening it is 3 lakhs. Appo what we normally do, closing 8 lakhs, opening 3 lakhs, current year 5 lakhs, like that we arrive, no. But before you arrive this 5 lakhs, inquire whether this 3 lakhs is still included in 8 lakhs. When you purchase at the shares in that company, at that time there was 3 lakhs, but later on they used the 3 lakhs for payment of dividend, for payment of dividend. Oh, appo when I bought the shares, I looked into their P&L, I saw 3 lakhs. But later we got dividend, no, that dividend they paid only out of 3 lakhs na. But today this 3 lakhs is not there in 8 lakhs. Appo you should deduct the dividend portion. You understanding only 2,10,000 is included na, but closing is 8 lakhs na, then this is 5,90,000. But before you identify current year profit, check whether opening is still included, dividend is paid, that portion alone you check. If the dividend relating to past paid now then it is paid out of opening profit. Dividend relating to past paid this year then it is paid out of opening profit. Hope you remember those 2-3 problems that we solved in the classroom. All of you, this classification important. Abnormality also they will not test, and in the dividend part they will test, my dear friends, all of you. So they may ask you this dividend adjustment, last year dividend received now, then deduct from the opening profit, then only you identify current year profit, which is further classified into pre and post. Opening plus certain number of months pre, then after acquisition it is post, like that classification if you do properly remaining nothing, all of you. This is adjustment. Next, my dear friends, there is something called revaluation. Balance sheet they will give you plant and machinery some value. Adjustment they are telling this is 1,80,000. Adjustment they are telling, so the plant and machinery was intended to be revalued at some 2,50,000 on the date of acquisition. So like this, some revaluation information or some fair value information given for the purpose of the consolidation at the time of acquisition. This information given, what you should do is very simple, compare book value, fair value on date of acquisition. This may be the book value or some other value may be the book value, because this may be after depreciation. This 1,80,000 is after depreciation. This is the balance as on the date of consolidation. This is the balance on the date of consolidation. But you should compare what? The book value that existed on the date of acquisition. Our depreciation rate given as 10% then you find out opening balance as 2 lakhs. And if you have acquired at opening date then book value 2 lakhs Suppose we acquired after 3 months and then 3 months depreciation should be deducted. So So like that, you should find out the book value on the date of acquisition, corresponding fair value. The difference is called the revaluation, profit or loss. Compute it and fix it as capital profit or pre-acquisition profit. Like that, we remember, my dear friends, all of you, 2 sums or 3 sums we have done in this line. So on the sums you please revise and go, because consolidation, even though these 2 adjustment comes, it's not very complicated. It is easy only. All other things, no, going to be a line by line addition only. So just remember this particular revaluation adjustment, my dear friends, all of you. Now you should also find out something called surplus depreciation. What is surplus depreciation? Depreciation that should have been charged, depreciation that was actually charged. That difference should be taken, computed and adjust against dash profit, adjust against capital profit. We should find out something called additional or surplus depreciation and adjust against what? Revenue profit. This you remember. Mutual owings elimination, unrealized profit, though I explained you upstream, downstream and all, generally for you downstream only, eliminate from consolidated profit, also eliminate from the stock. Eliminate from consolidated profit, also eliminate from stock. So that is unrealized profit. Mutual owings, though I have explained differences and all, generally difference is very remote possibility. If you have differences, it is only because of transit items, bills discounted items. The unaccounted interest concept are generally not tested at your levels. So thereby you can see, understand it is because of transit item. So if it is transit item, what we'll understand? Very simple pa. Here holding company shown receivable from subsidiary, it is 5 lakhs. Subsidiary balance sheet liability payable 4 lakhs. So you understand the difference as in transit item. In that case, what we should do now? Eliminate 5 lakhs here, eliminate 4 lakhs there, and remaining 1 lakh will be shown in the asset side as cash in transit. As cash in transit. Like that we told, my dear friends. Hope you remember, all of you. If a discounted bill then what we are understanding that bills receivable will be less, bills payable will be more. The 1 lakh is, the reason is because of discounted bill. In that case, what we should do now? 3 lakhs you eliminate from both the sides. Only 3 lakhs will be eliminated from both the sides. Remaining bills payable of 1 lakh will come in the balance sheet as bills payable because it represents external liability. Like that we discussed. Nothing beyond this, my dear friends. All other item line by line addition. All of you. So first step, various information identification, classification of reserves and surplus into pre and post. But at this stage only you will analyze bonus, if any, to know what is the share capital before bonus, because dividend would have been given on share capital before bonus. So analyze the bonus, classify general reserve, classify P&L, revaluation effect, if any, unrealized profit or loss, if any, calculations should be computed in the second stage. Then charts presentation, minority interest computation. How do you calculate minority interest, my dear friends? Minority interest will be computed. Very simple. We have particulars, total, holding interest, minority interest. Simple calculation. Equity capital, capital profit, revenue profit. When you take this revenue profit, ensure that depreciation was already adjusted. If there is revaluation, so that amount will be taken and minority interest will be added and will be taken into consolidated balance sheet. Holding companies first 2 items will be taken to chart B for finding goodwill or capital reserve. This will be compared with investment. If you have the dividend adjustment in our classification, similar dividend adjustment you should check there also. So what is that? Pre-acquisition dividend wrongly accounted na, deduct from investment, also deduct from chart C profit, deduct from investment, also deduct from chart C profits. Like that we discussed, my dear friends, and the dividend adjustments. So mathavadi consolidation is a mechanical job da, provided you do the classification correctly. So chart C, consolidation of reserves and surplus. Chart B, goodwill or capital reserve, how to find out? It is cost of investment minus pre-acquisition dividend. If it was wrongly accounted, share of net worth comprising of equity capital and capital profit. Compare, you will be getting goodwill or capital reserve. So then chart C, consolidation of reserves and surplus. Take general reserve, P&L, primarily of holding company, plus revenue share or share of revenue profit. But before this, regular adjustment that comes here is that unrealized profit, dividend, unrealized profit, dividend, stock reserve and dividend, those two normally comes here as a deduction. Then revenue share you add. And in chart B, if you have capital reserve, even that will be added to the reserves and surplus. This much you should remember. Mutual owings elimination, so you should eliminate from both asset and liabilities. So if there is no difference, so happy. If there is difference also, generally it is because of transit items or discounted bills. This much only consolidation, my dear friends. So we have taken 18 hours to 20 hours. அது கொஞ்சம் அப்படி இப்படி இருக்கிற மாதிரி இருக்கும், but very easy only. You should definitely attempt. I will not tell like to omit this consolidation out of this one choice omit பண்ணக்கூடாது, because my dear friends, if I am a student, you know, so many things doesn't work for me. Actually I explain all these workings, but I will start the solution with what? Suppose question number 4 was consolidation. What I will do as a student, I will tell you. Consolidated balance sheet of H Limited and its subsidiary. Solution the first. Next in the solution first part, equity and liability notes rupees. Number 1, shareholders funds. Into that share capital. Will I have any doubt over what share capital I should take? Absolutely no. So what plus, what minus? No, it is share capital of parent company. It is only share capital of parent company, holding company. So no doubt. Okay. Next what? Reserves and surplus. Reserves and surplus. Adala enakku doubt irukku. Unless I would have done all the workings, I will not take this. Seri vitru. Next we have what? Minority interest. In the minority interest, though we have separate computation of chart A, I have a shortcut. What shortcut, sir? That is subsidiary order share capital plus reserves and surplus into outsiders percentage should be minority interest. Unless there is some error rectification and all. This error rectification problems and all at your level is not dealt. Unless there was error or service charges payable was omitted, and the many problem we solved. It was a heavy problem. But at your level, there is no such error rectification and all. Appo net assets into outsiders percentage is what? Minority interest. And the number I understand. Then you will have current liabilities. Adala ore or adjustments da elimination of mutual owings da. That I should do. Mutual owings adjustment I should do. So that also I understand. This onnu da missing. Then I go to the second part segment, my dear friends, asset side. Under asset side we will have, my dear friends, so you have PPE, so intangible assets. All these things are what? Line by line addition. But only thing is PPE should be careful. If you have revaluation, what you should do? Book value addition. Then plus or minus revaluation profit or loss. Then plus or minus the depreciation effect. That amount only should be taken. That amount. If you can do that, or revaluation profit or loss, if you can compute that, then in the goodwill I have a doubt, because classification based money in the goodwill or calculations. So then we have, my dear friends, inventories, trade receivable, that is current assets, non-current assets, cash and cash equivalent. All these things are line by line addition, subject to mutual owings. Minority interest is not based on classification, my dear. Minority interest is unless there is error in the subsidiary's profit. When I say error, not in my calculation, in the subsidiary's profit, even if you classify or you don't classify, share capital plus reserves and surplus of subsidiary into outsiders percentage should be equal to minority interest. I will get the number. Appo கிட்டத்தட்ட ரொம்ப ஈஸியாகவே without much working notes I will get many numbers in the consolidation. அதுக்கு இந்த ப்ராப்ளம் I will not do first, I will do last half an hour I will allot for the consolidation. 30 minutes I will allot. அதில் 10 minutes இந்த போஸ்டிங் எல்லாம் முடிச்சா அதுக்கப்புறம் I will try to do classification to the best of my knowledge. I should have confidence. I should do classification and I will do this particular chart A, B, C preparation and will find out some numbers. அந்த நம்பர்ஸ் எழுதி பேலன்ஸ் ஷீட் டேலி ஆகுதோ இல்லையோ ஒரு டோட்டல் ஒன்று எழுதிடுவேன். முடிஞ்ச அளவுக்கு சேம் டோட்டல் 2 சைட்லையும் எழுதிடுங்க. இது வேறு ரெக்கார்டர் வேறு, டசன்ட் மேட்டர். ஸோ அப்போ இந்த சம்மோட ஒரு 60% ஆஃப் த நம்பர்ஸ் கரெக்ட். ஹூ நோஸ் 100% கரெக்டாக இருக்கலாம் அந்த எக்ஸ்ட்ரா எஃபர்ட்ஸில். இவ்வளோ நாள் ப்ராக்டிஸ் பண்ணியிருக்கீங்க. அப்படியே மிஸ்டேக்காக இருந்தாலும் அந்த குட்விலோ மைனாரிட்டியோ மிஸ்டேக்ன்றதுனால இட் இஸ் நாட் தட் யூடியூப் லைவ் ஆல்சோ ஓகே, டசன்ட் மேட்டர். ஸோ த பாயிண்ட் இஸ் 16 மார்க்ஸில் யூ வில் நாட் கெட் 0, யூ வில் கெட் 6 to 7 மார்க்ஸ் விச் கேன் சேஞ்ச் அவர் அந்த எக்ஸாமினேஷன் கேரியரே மாற்றலாம். ஹூ நோஸ் தட் ஒன் பர்டிகுலர் எக்ஸாம் கூட கிடையாது, கேரியரே சேஞ்ச் பண்ணலாம் அந்த 6, 7, 8 மார்க்ஸ். ஸோ கன்சால்டேஷன் டெஃபினட்டாக என்னால் ஸ்கோர் பண்ண முடியும் இந்த மாதிரி ஒரு இது அப்ரோச் வச்சுட்டு. ஓகே, அதனால் ஐ வில் நாட் இக்னோர் திஸ். ஆனால் இது இந்த ஜென்மத்துக்கு எவ்வளோ தெரிஞ்ச கொஸ்டினாக இருந்தாலும் கன்சால்டேஷன் ஃபஸ்ட்டு கொஸ்டினாவோ இல்லை நடுவில் செகண்ட் தேர்டாவோ சால்வ் பண்ண மாட்டேன். லாஸ்ட் கொஸ்டின் அப்படின்னு அலாட் பண்ணிவிட்டு ஒரு 30 minutes ஸ்பெண்ட் பண்ணி மினிமம் 7, 8 மார்க்ஸ் வாங்குவேன். முடிஞ்சால் 16 தட்டுவேன், அவ்வளோதான். ஐ வில் டேக் த கேம் இன்டு டீப்பர். அப்புறம் அங்கே போய் வைடு வாங்கலாமா வேண்டாமான்றதை யோசிப்பேன். ஸோ எனிவே தட் டசன்ட் மேட்டர் மை டியர் ஃப்ரெண்ட். ஸோ consolidation is somewhat a trusty chapter only, my dear friend, trustworthy chapter. So you can just don't ignore this chapter considering tough, difficulty, etc. my dear friends. ஏன்னா அதில் consolidated balance sheetல 75% of the numbers we can easily arrange. 25% of two numbers தான், ஒன்று goodwill or capitalism, இன்னொன்று reserves and surplus. இதுதான் difficulty. மற்றதெல்லாம் mutual owings எல்லாம் definitely we can do. Okay, so இப்போ we have completed 4 major chapters. கிட்டத்தட்ட வந்து amalgamation, internal reconstruction, அப்புறம் partnership and CBS. So 4 major chapters which is close to 100 hours வந்து we have completed in 2 hours or 1 hour 45 minutes timeல வந்து we have completed, my dear friends. இப்போ with some more time we will just go to the remaining topics, my dear friends. கொஞ்சம் quick, shall we? Okay, இப்போ since I'm not dealt you the liquidation and buyback, I just want you to go through this on your own. Let me revise quickly the chapters what we have covered. So it is non-banking financial companies, and we have ESOP. So these are the 2 chapters that are still we have taken. The 4 chapters completed, 2 chapters completed. After accounting standard we told you we have a separate session for 30 marks, 35 marks coverage. We have a separate session just 1 day before the examination. So 11th exam நினைக்கிறேன். So 10th அன்னைக்கு morning or 6:30 to 10 o'clock we can have this particular accounting standard session. So you have 11th 2 to 5 examination. அப்போது நான் கொஞ்சம் ஓரளவுக்கு ஹவர்ஸ் சப்ஸ்டான்ஷியலாக முன்னாடியே பண்ணிடுறோம். ஏர்லி மார்னிங் எழுந்து அக்கௌண்ட் ஸ்டாண்ட் முடிச்சிட்டோன்னா செம 30 மார்க்ஸ் பாக்கெட் பண்ணுறோம், பாக்கி படிக்கலாம் அப்படின்னு அந்த இதில் செம்மையாக படிக்கலாம். அதனால் எந்த எக்ஸாமுக்கும் போகாமலாம் இருந்துடாதீங்க, செம்மையாக பண்ணலாம். ஓகே, ஸோ non-banking financial companies, my dear friends, you know the problem areas. It is provisioning requirements. Provisioning requirements. Okay, you should remember the percentage. You should remember the percentage. So in the percentage remembrance plus on the higher purchase leased asset problem, I will directly discuss on that particular date. இன்னைக்கு வேண்டாம், இன்னைக்கு அதை டிஸ்கஸ் பண்ணி வேண்டாம். இட் இஸ் பெட்டர் அந்த ப்ரொவிஷனிங் இன்னும் தான் நல்லா கன்ஃபார்ம் பண்ணி மைண்டில் ரெஜிஸ்டர் பண்ணி, ஏன்னா நடுவில் இதை படித்து வேறு குரூப் ஒன்றுக்கு படித்து அதெல்லாம் தேவையில்லை. ஸோ லெட்ஸ் ரிமெம்பர் திஸ் பர்டிகுலர் பர்சன்டேஜ் இன்க்ளூடிங் அந்த டைமில் பேங்க்கோட பர்சன்டேஜும் கம்பேர் பண்ணிவிட்டு நம்ம அன்னைக்கு கிளாரிட்டியாக போவோம். நேராக டுமாரோ advanced accounting exam na, today we'll learn this, like that we will learn. Okay, so now it's not worth to spend time there. Okay, ஆனால் இதுதான் வந்து I feel the relevant area. இன்னொன்று வேல்யூவேஷன் ஆஃப் இன்வெஸ்ட்மெண்ட்ஸ். ஸோ அதில் வந்து அந்த வேல்யூவேஷன் ஆஃப் இன்வெஸ்ட்மெண்ட் ரொம்ப சிம்பிள், மை டியர் ஃப்ரெண்ட்ஸ். வெதர் இட் கேன் பி அக்ரிகேட்டடா, one category to another category, that particular problem which we have done, so that problem also you just glance and go. ESOP, employee stock option plan, my dear friends, employee stock option plan. My dear friends, when a company offers some shares to the employees under some scheme, shares to the employees under a scheme called employee stock option plan. It is provided at generally free of cost or at a particular value. It is provided at a particular value, but giving some gain through that issue of shares to the employees. It is motivating the employees to buy the shares, but it is not a one side motivation. It is something like 40 rupees, 200 rupees share I am offering to you at 40 rupees. 200 rupees worth of share I am offering to you at rupees 40. Appo, subject to certain conditions. Generally it is service condition. You should stay in the company for a certain number of years. Sometimes it is performance condition also. So once the target is to be achieved, earnings target, market price target, sales target, profit target, EPS target, appadinu target kodutha adu achieve panna we will give this. Seri, appo over certain number of years, either sometimes employee simply there in the company for a certain number of years, or be there in that company also achieve target. So both service and performance condition. In that case, during that particular period during which the employee is striving hard to achieve that particular target, we believe that we are getting some benefits. If the employee is staying in the company for 3 years continuously, we are getting some stability in the company. No sudden people going out and all, thereby we are losing people. So sometimes what happens is that instability will affect the company. So stability, that is a benefit. So all such benefit when it is there in P&L, correspondingly that benefits could be in the form of increase in profit or decrease in cost. Some benefit is there which could not be quantified. Upon the benefit matching cost we couldn't quantify. So thereby indirectly what we are telling what benefit employee getting that benefit should be expensed. What benefit employee getting that benefit should be expensed. What benefit employee gets? Very simple. 200 rupees share you are offering at rupees 40. So this is called market price of the share or fair value of the share, and this is exercise price, also called as issue price. Upon difference between these two, we are understanding as the gain or expected gain to the employee. Expected gain to the employee. About the expected gain should be expense in the P&L over the period of this contract. We call that as vesting period. We call this as vesting period. Apo, difference between this market price. So in the classroom only, I told you by using the FM technique, we can project what is the value of option, etc. and all. By following different models, you will be learning under CA final level. So you have something called date of announcing this scheme. We call this as date of grant. Date on which you become entitled. You call this as vesting date. The difference between date of grant and date of vesting is called vesting period. During this period, you have to expense. The difference between the expected market price of the share, which is computed on the date of grant. The computation is on date of grant, but market price is not on the date of grant. The expected market price on the date of vesting is estimated on date of grant, and that number and exercise price difference will be identified and booked as expense over the vesting period. Suppose vesting period 4 years and this is the gain அப்படினா every year you should book expense of 40. Like that we are understanding, my dear friends, all of you. Okay, appo that 40 entry, first let us complete the entries and I will bring out those computations and all. Entry wise it is employee compensation expense to ESOP outstanding. Like this we make entry by end of first year, year 1 end, say 40. This 40 will be transferred to P&L. So P&L to employee compensation expense 40 and 40. Then year 2, year 3 and all same entries will be continued. What happens? Every year P&L will have 40. In the balance sheet, this ESOP outstanding will be accumulated under what head? ESOP will be shown as part of current liability or non-current liability. Is it current liability or non-current liability? This ESOP outstanding will be shown as part of reserves and surplus. Very good, super. You remember all those things. So balance sheet under the head reserves and surplus, you have ESOP to the extent of 160. Now what happens now? That employee is buying the share. Appo company receives money. How much money will be received? This is called excise entry. Excise entry, for which some more time limit will be given. 4 years given for vesting, now another 1 year or 2 years will be given for exercise, for them to pay money and buy the shares. So during that period when they pay money, it is bank debit 40. Then this option whatever you created will be cancelled. It is 160. To equity share capital, assuming face value as 10, to securities premium 190, which is the difference between market price, the estimated market price, and face value or balancing figure either way. Like this we make the exercise entry. Now 4 years employee was there in the company, he satisfied condition, but later on he says that your shares I don't want. So then that is called lapse. So we gave 6 months time for you to exercise. He didn't do that. So if it is lapse now, then ESOP whatever he created over a period of 4 years will be simply transferred to general reserve. Hope you are understanding this, all of you. Okay. So that way we are understanding this, my dear friends. The normal expense accounting entry over the period of vesting, and this is called the exercise entry, and this is called the lapse entry. Okay. Now suppose it is been given like this, my dear friends, that 1000 employees given 100 shares option to 100 share option, 1000 employees 100 share option to purchase at 40, market price 200. Now what do we understand? Total expense to be accounted will be, it is 1000 into 100 into 160. This will be the total expense. So what will be the total expense, my dear friends? It is 1 crore 60 lakhs. 160 lakhs is the expense, my dear friends. So you will be booking expense for 1 year 40 lakhs, like that you will be booking. Okay, va? Appo year 1 expense accounted 160 lakhs by 4 years, it is 40 lakhs. Like that you have made the accounting, my dear friends. Now what happens is, year 2 we are understanding 200 options lapsed. 200 options lapsed. So how, sir? Usually lapse now only when they are entitled it will lapse. No, not necessary. We ask them to stay for 4 years. If you stay for 4 years, we will give this. But having signed that contract, after 1 year, some people have left. So 200 employees have already left the organization in year 2. Appo, how year 2's expense will be computed? Year 2 expense will be computed as 800 into 100 into 160 divided by 4 into 2. 800 into 100 into 160 divided by 4 into 2. Sir, but in between you told like no some restatement, all these things are not. Date of lapse not given. Simply year 2 this much lapsed na, then this is what you should compute. Don't worry about any in between restatement and all. So it is always the construction contract concept, AA7 concept. Cumulative expense minus past expense, current year expense. Simple. ESOP very, very simple. Cumulative expense, so divided by 4 into 2 should be the expense of first year and second year. So like that you understand, minus 40 lakhs should be the second year expense entry. So based on the revised number, so this should be the total expense. Divided by 4, 1 year expense. Into 2 should be expense of first year and second year. But first year already booked 40, no? Yes, you can't change that. But thereby, second year expense coming to 24 lakhs. Second year expense coming to 24 lakhs. Hope you are following this, everybody. Okay. Suppose year 3. Year 3. What happened now? Year 3, another 300 options lapsed. Another 300 options lapsed. 300 options, 300 employees. 200 employees left. 200 employees left. 300 employees left. What is the expense? What is the expense for third year? Year 3, another 300 employees left. So what is the expense for third year? How do you compute expense for third year? So we are getting 500 into 100 into 160 by 4 into 3 should be the expense of first year, second year and third year, minus 40 lakhs minus 24 lakhs. So what are we getting? So this number, my dear friends, what are we getting? Sir, we are getting 4 lakhs negative. Oh, we are getting 4 lakhs negative. In that case, journal entry will be ESOP outstanding to general reserve. So only when in between restatement comes na, then you make the entry pa. Because I told you at one time, so this is an adjustment against employees compensation expense. So now you don't do that, my dear friends, because the latest examination, that is in the May 2022 examination, solution is that at the end of the year, you make the calculation, and when there is no commitment of the date of lapse, etc., don't do any such employee compensation expense and all. Any surplus, whether lapse after vesting or lapse before vesting, transfer to general reserve. Transfer to general reserve. I just want to clarify this point. That is why we are taking slow and extra time for understanding this. So any surplus, whether lapsed before vesting or after vesting, you transfer to general reserve. So thereby transfer this 4 lakhs to general reserve, my dear friends. Hope you are following this, all of you. Should I book any expense in third year, sir? No, not required. Don't book any expense in third year. Now what happened in year 4 is that nobody left. What is the expense? Year 4, nobody left. What is the expense? So it is 500 into 100 into 160 by 4. If you calculate itself, you will be getting the answer. If you want to calculate in the same manner, by 4 into 4, that is total expense, minus the 40 minus 24 plus 4. Like that you should calculate. So that way you will be getting this number, my dear friends. What is that answer? It is 20 lakhs. Hope you are getting it. 20 lakhs. You will be booking as expense in the 4th year. Our 3rd year expense, sir. 3rd year, there is surplus. Already 2 years we have created. Surplus will be transferred to general reserve. So no more confusions in relation to ESOP. Always compute cumulative minus past. And that amount, if it is finding as still expense to be created, create it. If it is surplus, transfer to general reserve. Don't do anything else. Hope you are following this. All of you. Choice limited problem, also that senior executive problem, that value of option will be 40, value of option will be 30, like the two value of option given based on a particular condition. In one particular year we understood value of option is 40, in another year value of option is 30, so that change also you should be considering. Hope you remember. Okay, so ESOP sometimes they will bring you some surprise this year by having 10 mark question. There is a chance because last 2-3 exam 5 marks. So they want to bring it to the mainstream here. So 5 mark question is question number 1 and question number 6. So 2, 3, 4, 5 or mainstream question, like it is like a 15 mark question, and there are times like one single question coming for 20 marks, like that and all. So there is a chance ESOP can get into that particular thing. So the other 3 chapters what I told, like which is handled by Suman sir, my dear friends, as far as bank account is concerned, practice at least one problem of P&L and balance sheet. One problem. One at least glance through that, my dear friends, because they may bring a surprise here by asking a complete 20 mark question. Suddenly bank we normally expect 5 mark, 10 mark question, they bring out 20 marks. Also revised, I can just tell you the rebate on bills discounted. Hope you remember the concept of rebate on bills discounted. So what we understanding, it's a discount that relates to the period that falls outside our accounting period. Suppose our financial year ending by 31st March 2023 and the bill is due by 10th April 2023. The 10 days discount is what considered as rebate on bills discount and closing balance. The 10 days discount which is attributable to next year is what we are understanding as rebate on bills discounted. All of you, opening rebate should be transferred to discount of current year, interest and discount of current year. Closing is transferred from current year interest and discount to rebate. Balance transferred to P&L. Hope you would have solved a lot of questions on to rebate on bills discounted. There is high chance of this rebate on bills discounted question. So provisioning percentage we recall on that date. One thing is, at least you can feel very safe, is that or 99% of capital adequacy ratio, the risk weight adjustment and all, the chance of examination is 1% only, because last examination they suffered. So thereby in the current examination the chances are very remote. So you have the risk weighted adjusted calculation, the capital adequacy ratio, so the CAR calculation, so where you will be having tier 1 capital, then tier 2 capital, which are all, then various assets 20% weight, 50, 100 weight, 0 weight application, are the base money, the ratio calculation. If you learned, no problem, but many finding it difficult to remember those stuff and all. The last examination students suffered. Our next 2 examination, generally the question will not be repeated for that computation, my dear friends. So either rebate, normal provisioning, or P&L account regular. But my doubt is, along with P&L, they may also test you a balance sheet problem. P&L, balance sheet, in that rebate also tested 20 mark question. Definitely they can bring a surprise onto bank accounts 20 mark question. Adu romba naala waiting ana oru area. So that is one. Then buyback I told you simple accounting entries. So you should know the entries, my dear friends. Premium on buyback will be adjusted against, if you have dash, it will be adjusted there. It will be adjusted against securities premium. Similarly, if there is share capital bought back, you should also create dash. You should also be creating CRR. Upon the entries testing this time expected maybe only for 5 marks. Regular coming for 10 marks. This time we are expecting for buyback only for a question of 5 marks, my dear friends. Okay. Liquidation remember those SOA concept. So list A to list H, you should remember, my dear friends. Or somehow the focus on the liquidation, because these are the 3 chapters I find they bring a surprise. Otherwise, other chapters traditionally it is happening like that. So only either liquidation, bringing out SOA concept, last 4 or 5 attempts they didn't test, or it could be bank, These are the 2 chapters that can surprise you by having a 20-mark question, my dear friends. Okay, so that you without fail go through. Accounting standard 35 marks, 30 marks, or sometimes we can extend to 35 marks. We will have a separate slot for this by 10th, I think so, 11th examination, 10th. So next our schedule will be, so today the pace at which we did, so we didn't require this particular 3 hours, we required only 2 hours, so 2 hours we completed. So do not waste time, since you have one more session for the same advanced accounting sir. At that time, any doubts if you have, you can raise. Second is your examination. So thereby, my dear friends, 31, 1 and 2. At least from 31 onwards, you should not touch any other subject. The humble request is from 31 onwards, Monday onwards, maybe till Sunday, you can just go through, but Monday onwards, don't even suddenly you think about tax. ஐயோ கொஞ்ச நேரம் டாக்ஸ் படிக்கலாமான்னு தோணும், அதெல்லாம் பண்ணவே பண்ணாதீங்க. ஸோ ஃபஸ்ட்டுக்கு மட்டும் அந்த ஃபஸ்ட் எக்ஸாமினே கியர் அப் ஆகணும். மைண்டு ஃபுல்லாக அக்கௌண்ட்ஸ் தான். அந்த அக்கௌண்ட்ஸ் படிக்கும் திடீர்னு எங்கே இருந்தாவது ஒரு டெம்டேஷன் டு டூ சம் அதர் சப்ஜெக்ட், ஐயோ அது என்ன நமக்கு தெரியும், லெட்ஸ் ரிவைண்ட் half an hour, வேண்டாம், எதை பற்றி யோசிக்காதீங்க. when you try to recall costing, tax, law, ஒன்றுமே ஞாபகம் வராது, அப்படியே பிளாக் போர்டு தான் காமிக்கும், doesn't matter. So Monday, your examination is on Wednesday, so Monday, Tuesday, Wednesday till you go to the examination or till you complete the examination, accounts தான். Okay, so that should be there. So Monday we are meeting at 2 to 5 for accounting chapters revision, no accounting standard. Tuesday இல்ல எப்படி பண்ணலாம், மண்டேவே ரெண்டும் சேர்த்து பண்ணலாமா, இல்ல how do you say, chapters on Monday evening 2 to 5, then Tuesday morning we'll have accounting standard, or Monday stretch பண்ணலாமா? What is your suggestions? எனக்கு எதா இருந்தாலும் ஓகே தான். I felt like we'll just take chapters so that அன்னைக்கு நைட் எல்லாம் கொஞ்சம் நல்லா படிச்சுட்டு ஏதாவது டவுட்ஸ் இருந்தால் அடுத்த நாள் கேட்டு Tuesday வந்து வெறும் ஸ்டாண்டர்ட்ஸ் அப்படின்னு பண்ணலாமா அப்படின்றது தான். So since many are suggesting this Monday and Tuesday, so we'll do Monday and Tuesday itself. Okay, so for these revision. Okay, thank you. Any doubts if you have, please do raise. There is no point in having fear. So you have done plenty, 400 hours of accounting you have done, and you have done 1500 hours of class, my dear friends. So which means you have not merely hearing the lecture or attending a lecture. Through class you are preparing for exam. When you try to recall, it may not comes to you just like that as an answer, the subject, but a specific question is posted to you. And if you apply your mind, not with your mind that எனக்கு தெரியாது, இந்த கொஸ்டின் தெரியாது அப்படின்னு சொல்லாம அந்த கொஸ்டினுக்கு ஆன்சரை நீங்களே உங்களை கேட்டு பாருங்க. From somewhere it gives you, it means you are already done. It is not that 7th 8th sense giving you answer, somewhere it is getting stored. It will take time to unwind, but you should maintain absolute calm. You can't be nervous, my dear friends. அதனால இந்த ஒரு few daysல எந்த நர்வஸும் வேண்டாம், ஓவர் கான்ஃபிடென்ஸும் வேண்டாம், ஜஸ்ட் நல்ல கான்ஃபிடென்ட்டாக இருங்க. ஓகே, ஹெல்த் இஸ் வெரி வெரி இம்பார்ட்டன்ட். நல்ல குட் ஸ்லீப் டூரிங் த நெக்ஸ்ட் ஃபியூ டேஸ் எல்லாம் வந்து நல்ல ஸ்லீப் வேணும். ஏன்னா எக்ஸாமினேஷன் பிஃபோரும் சரி லாஸ்ட் 2 டேஸும் சரி ஸ்லீப், ஹேவிங் லெஸ் ஸ்லீப், டயர்ட்னஸ், பிரெயின் நிஜமாகவே வீக்கன் ஆகும், சரியாக எஃபெக்டிவாக ஒர்க் பண்ணாது. 7 hours மஸ்ட். இந்த ஆஃப்டர்நூன் நேப் இருக்கிற ப்ராக்டிஸ் இப்போது இன்னிலேருந்தோ இனிமேல் இருக்குது அப்படின்னா அது வேண்டாம். ஏன்னா அது ப்ராக்டிஸ், அந்த ப்ராக்டிஸ் இம்மீடியட்டாக கில் பண்ணும். சார் நான் சாதாரணமாக மத்தியானம் தூங்குவேன் சார், அது வேண்டாம். பிகாஸ் 2 to 5 எக்ஸாமினேஷன். அந்த ஹேபிட்டை நீங்கள் இப்போ பிரேக் பண்ணலன்னா என்ன ஆகும், அந்த 2 o'clock இல்லை எப்போ தூங்குறீங்களோ 3 to 3:30 தூங்குற டைம்னா தானாக எக்ஸாமில் தூக்கம் வரும். அதனால் அது வேண்டாம். ஸோ இம்மீடியட்லி ரைட் டுடே ஆன்வர்ட்ஸ், இஃப் யூ ஹேவ் த ஹேபிட் ஆஃப் ஆஃப்டர்நூன் நேப், சார் நான் 10 minutes தான் நேப் பண்ண வேண்டான்ற, ஸோ அது வேண்டாம். ஓகே, ஸோ இனிமே நைட்டு மட்டும்தான் ஸ்லீப். ஸோ 7 hours, ஸோ 10 o'clock to 5 o'clock. இல்லை 10:30 to 5:30 இல்லை 7.5 hours அந்த ஆஃப்டர்நூன் இது வேண்டாம். தூக்கம் வேண்டாம், நீங்கள் சும்மா ஜென்டில் ஒரு வாக் பண்ணிட்டு வாங்க. ஓகே, ஸோ ஆஃப்டர்நூன் ஒரு பர்டிகுலர் இதில் தூங்குற இது சிஸ்டம் வந்துச்சுன்னா பிரெயின் தானே அது போயிடும், ஷட் டவுன் ஆகிடும். அது அதுக்கப்புறம் யோசிக்க ட்ரை பண்ணணும், அங்கே ஆக்டிவாக பண்ணால் வராது. ஸோ ப்ளீஸ் டு நாட் ஹாவ் தட். இப்போ இருந்தால் வேறு என்ன உங்களுக்கு எல்லாம் சொல்லணும்னு அவசியம் இல்லை. நீங்கள் எல்லாம் சமத்து பசங்க தான், நல்ல ஒரு கான்ஃபிடென்ட் பீப்புள் தான், எக்ஸ்ட்ரா டேலண்ட்ஸ் எல்லாம் இருக்குது உங்ககிட்ட, எல்லாம் நிச்சயம் பாஸ் பண்ணுவீங்க. ஓகே, ஸோ வில் மீட் ஆன் மண்டே. ஓகே, பாய், தேங்க்யூ. Thank you, Shruti. All the best. Hearty wishes. Do well. Yeah, all of you, thank you so much. All the best.